My name is Jonathan McGovern with Quick eFile Tax Service, and I'd like to take a few minutes to give you a quick rundown of the no tax on overtime legislation that has recently been introduced. First thing, it is a deduction, not an exemption. So the overtime pay is still included in your take-home pay. So there's no change in your tax structure. You have to file your 2025 taxes in order to take the benefit of the tax deduction from the no tax on overtime legislation. The no tax on overtime is actually specific to what's called the premium portion of your rate of pay. In the structure, there is your regular hourly pay, which is your straight time, and in your overtime, it is your hourly pay, your regular hourly pay, plus 1/2 of what you normally make. Let's use $30 per hour as a round number. At $30 per hour, you would make $30 per hour. At time and a half, you would make $45 per hour. Well, it's the $15 per hour that you are actually receiving a deduction on in your 2025 tax filing. Most people are under a misguided perception that the entire $45 per hour, which is considered overtime, is tax-free. That's a misconception. It's only the $15 per hour. It is only the premium component of it that is actually able to be deducted, not the entire amount that you earned on overtime. The same thing goes if, let's take for instance, a particular job on a Saturday pays time and a half, but on a Sunday it pays double time. So your regular $30 per hour rate would become $60 per hour, but it's only the premium rate, $30 per hour, that you're making in the double time component that is actually not due on taxes. So these two things have to be kept into consideration. It's only the premium component of it, and you are limited. So if you are one of the people who is in an industry that has a very high rate of pay and a sufficient amount of overtime, you may reach, as a single tax filer, $12,500 per year, which is the maximum amount as a single filer that you would be able to deduct. As a married filing joint, you'd be able to deduct $25,000 per year. And another caveat is that once you go over $150,000 as a single filer or $300,000 as a married filing joint filer, the benefit, the tax deduction, the no tax on overtime is reduced, or it is phased out at the $150,000 for single filers, the $300,000 for joint filers. The last of it is that you have to file your taxes in order to receive the benefit. There will be no difference in the amount of taxes that you had withheld throughout the tax year from 23, 24, or 25. It's going to stay the same. But when you file your 25, you would get the benefit of the deduction at the point in which you file. One more caveat, and then I'm going to let you go. You may need to bring your last paycheck stub or your last few paycheck stubs, because with this being a new accounting paradigm, the information that's needed to actually break out your regular rate of pay during your overtime days or during your overtime time, your regular rate of pay and your premium rate of pay if you're paid in a manner in which everything is lumped together, then it needs to be separated back out in order to properly file it and to properly account for what you've actually worked. So you may not only need your W-2, but you may also need your last paycheck stub or your last few paycheck stubs with a breakout of exactly how much regular time you've worked, the overtime you've worked, and then a breakout of the premium component of the overtime versus the straight portion of the overtime. My name is Jonathan McGovern with Quick E-File Tax Service. If you have any questions, you can reach me at 770-966-2755. Thank you very much.